Oh, ding ding. Still a ton of volume. Hold on. Ah, I failed. All right. Well, that was fun. Today was a fun day. All right. So, pretty hard rejection and down into the end of the week here. Um, Closing the day out at 59.70, about $22 below the weekly delta neutral. Now almost $100 below gamma neutral on the monthly. Definitely exceeded the MM's expected move, which was 54 points to the downside by quite a bit. So puts very cheap at close yesterday, not so much anymore. VX up 5.67%. The VIX up almost 10, and VIX 3-month up almost 5. Not quite their peak for the day, but still fairly impressive. A little support was found at the 59.30 level, which we'll get to later, is an important technical level. But the market didn't really bounce back that strongly. We are getting a little bit of an inverse head and shoulders here on the 30-minute. That might mean upside continuation into next week. However, the upside will be difficult to get, and most of that move will probably need to occur in after hours. Here we are on futures, where we do have a confirmed breakdown. We may get a retest of the bull signal on that pullback here, and that would be, roughly, kind of close to 6,000, probably around like 59.85, 59.90, and we'll see what happens there. If we get a failure on the retest of the bull signal, it's very likely we get a continuation to a new low, given that the uptrend has failed and this is kind of forming a bit of a head and shoulders. So, yeah, if there's just more sellers here, that's going to be pretty bad. Dollar down a little bit today, but yields up at the top end of the curve, and way down at the low end of the curve. We see the bear steepener getting significantly worse very quickly. The 20-year closing out today above 4.9. I think that's a fairly significant move for it. I think it maybe a new high. Well, new local high. It's been above 5 before, but new local high on the 20-year. Commodities still doing kind of some weird shit after that open and close yesterday, but up a little. We got oil up, copper flat, precious metals down, mostly because the dollar just really hasn't moved much. Pull up some materials are still kind of meh, flat, and so is agricultural. Energy, the rest of energy, not doing too much. So not a lot of big moves in commodities yet. That's something we'll watch out for if we see them. Correlation, still divergent. The 1 month slightly above the 3. Near-term volatility expectations are, well, they rose very sharply today and kind of trimmed into close, but they are not coming down very rapidly, and this kind of consolidation makes me think we're going to see another further breakdown and dispersion, most likely. Leverage on the carry trade now at a new all-time high, after yesterday's all-time high, at 9.06x. We're also seeing a little bit of leverage pick up in the 6-month, now at 7.2, and the 3-month at 7.14. We did see the forward yield on volatility turn positive briefly today, but came back down into close at negative 4.81%. Bond vol pretty flat on yesterday, but we are seeing correlation catch up with the increase in bond volatility. Skew finally came down a little bit yesterday. We'll see how that comes down today. If we continue to see fewer sold puts or more bought puts, either one, and the trend on skew starts to turn bearish and we get a breakdown on it, that's bearish. It means, short vols pulling back, people are buying the tails, and if people are buying the tails, they're assuming that the market's going to come down. Breadth still sucks. 20% of the S&P above its 20-day moving average as of yesterday's close. This will have fallen today, obviously, and maybe even more dramatically, given that tech sold off pretty hard today. And tech's been the one resilient part of this. And so, since the sell-off was broad in breadth and in tech today, we're likely to see this come down. We can check those after hours if you want. The correlation between VIX, cash VIX, and VX futures starting to level out after turning negative on our big run up over the last 3 days. We'll look to see if correlation starts to increase, but right now it's still on the decline. So, for all intents and purposes, we should consider that vol is still coming down a little bit, just maybe not continuously. It's kind of a bumpy road down. But if we start to see correlation pick up again, probably with the forward yield of volatility over 0%, then I would expect larger moves in vol moving forward after that. Fed fund futures moved up a tiny bit today, but still one rate cut into the end of the year. And the 2-10-year moving up even higher today, almost tapping 30%, positive 30%. So we're getting there. Very close to the pre-COVID crash levels in December of 2019, starting to get up to the levels that we saw in like September of 2007. So pay attention to that. And then lastly, I wanted to go over the technicals. We tested the 50 MA again today, caught a little bounce on it, but ultimately did not get back above the 30 EMA. That means tomorrow we're going to open between the two of those. This is a bear rally into a breakdown, so the continuation from here is not very likely. A continuation to the upside from our low test. It's actually more likely that we retest that low. And possibly fail that low on a retest. Now this is substantial weakness into the back half of the week once again. So week closing lower. We did not get a newer high this week. We did get a higher low, but not a newer high. And so, we would be looking towards that 59.30 level for a breakdown. And then, out here at the trend around like 58.80 or so. And then, breakdowns beyond that, we'd probably be looking to somewhere around here, like 5,800 at the weekly 20 MA. So keep your eyes on those levels. Obviously, a break back to the upside of 60, 99, 97 would be bullish. But until we get that, we don't really have a reversal here. And this week is a failed reversal. And failed bear rallies generally lead to more downside. So I will see you guys Sunday for the member stream. I hope you'll have a great weekend. Happy holidays once again. And I'll catch you later. Peace. Don't forget it's at 1:30 p.m. now. All right, bye.